Welcome to the Advanced Guide to Betterment ETFs, a comprehensive tutorial designed to help you navigate the world of exchange-traded funds with confidence. To start, let's define what an ETF is. A type of investment fund that is traded on a stock exchange, like individual stocks, but tracks a specific index, sector, or asset class. Betterment is a popular robo-advisor that offers a range of ETFs to its users, allowing for diversified and low-cost investing. The key concept behind Betterment ETFs is to provide broad diversification and reduce risk by spreading investments across different asset classes, sectors, and geographic regions. To get started with Betterment ETFs, you'll need to understand the different types of ETFs available. These include stock ETFs, bond ETFs, commodity ETFs, and international ETFs. Each type of ETF has its own unique characteristics and benefits, so it's essential to choose the ones that align with your investment goals and risk tolerance. One of the most significant advantages of Betterment ETFs is their low costs. With expense ratios ranging from 0.06 to 0.40%, you can keep more of your money invested and reduce the impact of fees on your returns. Additionally, Betterment ETFs are tax efficient, meaning they are designed to minimize tax liabilities and maximize after-tax returns. To illustrate the benefits of Betterment ETFs, let's consider a practical example. Suppose you want to invest in a diversified portfolio of U.S. stocks. You could choose the Vanguard Total Stock Market ETF, which tracks the CRSP US Total Market Index and has an expense ratio of just 0.04%. By investing in this ETF, you'll gain exposure to thousands of U.S. stocks, reducing your risk and increasing your potential for long-term returns. Best practices for investing in Betterment ETFs include starting with a solid understanding of your investment goals and risk tolerance. It's also essential to diversify your portfolio by spreading your investments across different asset classes and sectors. Regular portfolio rebalancing is also crucial to ensure that your investments remain aligned with your goals and risk tolerance. In conclusion, Betterment ETFs offer a powerful tool for investors looking to build a diversified and low-cost portfolio. By understanding the different types of ETFs available, taking advantage of low costs and tax efficiency, and following best practices, you can unlock the potential of Betterment ETFs and achieve your long-term investment goals. With this advanced guide, you're now equipped to navigate the world of Betterment ETFs with confidence and make informed investment decisions that align with your financial objectives.